Nothing's more important than the insider buys when it comes to the CFO. They were buying the heck out of the stock in June. Now, are you telling me that they had no knowledge? And could they have really burned that much money buying back stock?
$3.2 billion worth of stock, I think an average cost of
176.
176, yeah.
And David, when you buy that stock buy a lot of billions of dollars of stock in June, do you really not know how badly? Now, to some degree, when you're on the conference call, there is this very otherworldly, declining by high single digits going down. So it's a 20% grower at year end, which is why it has a market multiple. But I think that the thing that most concerns me, my chapel trust still, we cut it in half. But the thing that really concerns me here, it's not a growth stock, if that guidance is true.
Right.
It's a company that was a once great growth stock with a trajectory that would indicate at this point next year that you have a company that doesn't really, that has expenses going up dramatically, that revenues are decelerating dramatically. That's the prescription for a short sale. And that's what we know is a short sale.
How could that be Facebook?
Well, because I don't...
with the most prodigious
and that's why
growth and margins we've ever seen.
Okay, now thank you for leading me, because I don't believe it. I simply don't believe it could be this bad. Now, they have to try to get a hold of the spending. I mean, you remember when Ruth Porat came into Alphabet and said, you know what, we're done with the willy-nilly spending. We also know that they obviously had very little concern for these privacy issues. We know in the previous quarter they said that things had not been impacted. So I think a lot of people would have felt that knowing that April was not that impacted, they should have come out, because they didn't indicate that April wasn't bad. They should have indicated in May. They should have come out and saying we're seeing a slowdown. So I think a lot of people are like, are you kidding me?
Right.
How could you not have pre-announced the slowdown? Because it was a situation where classically, David, in the old days, you would have issued a pre-announcement.
Do you think it has to do with people migrating to a certain extent to Instagram or becoming the key platform in stories, but not being as monetizable, at least at this point, as the news feed?
Yeah, look, I think that you've got a combination of that not being as monetizable. Old Facebook is better than new Instagram.
Right.
But you also had in the Alphabet call, they talked about how you have to spend much more if you shift to mobile. It didn't look like that Facebook had to spend much more to shift to mobile. Now you feel otherwise. They were the ones, obviously, they're talking about Europe being hurt. But what seemed very disingenuous on the call, and I use that word not that lightly, was every time that they were asked about the deceleration, they talked about currency.
Right.
Currency. I mean, give me a break. I mean, look, if this were a company and with the insider sales by Facebook, you would say, by Zuckerberg, 17 million shares, you would say, okay, listen, we need a shakeup here. COO, CFO. And by the way, when things are good, these people are champs. When things were bad, they were completely helpless and out of their element. And if this were the NFL and it was the beginning of a season and they had won 3 and lost 1, you'd say, are they real? And you'd say, no, they're not real. They're not real. They're not a real growth company. Now, Twitter came out and then was another nail in the coffin, because then you start thinking maybe social media is not real. But in the end, the advertisers are going to come back. I think their guidance was too conservative. I would not sell the stock if I owned it.